Hello, everyone, and welcome to today's No FOMO Charts Technical Analysis live stream. It is April 29, 2023, Saturday, just after 11 o'clock p.m. Eastern Standard Time. So, doing the stream a little earlier today, this weekend. All right, let's start off. I want to say thank you for watching and following and supporting. And I am streaming live on TradingView, YouTube, and Twitch. We also have a Twitter as well. All right, let's get started. The weekly watch list. So for stocks, we are still right in the middle of stock earnings season here in the USA. It's Big Tech Week Part 2. Part 2. So just to name a few companies, we have AMD, Pfizer, Clorox, Ford Motors, Starbucks, Uber, CVS Health, Kraft Heinz, Marathon Oil, Qualcomm, O Realty Income, Zillow. We have Apple, Square, Block, Coinbase. If you're doing crypto, that's a big one. ConocoPhillips, Lyft. We have Moderna in there. It's an old, vaccine stock, but still, it would be interesting to see if they're doing bad or if they're doing okay with their earnings. NEO, Royal Caribbean Cruises, AMC Entertainment for the meme traders out there as well, etc. Now, also, in conjunction with big stock tech earnings, we have the Federal Reserve FOMC statement regarding the interest rates this Wednesday. So this Tuesday, Wednesday, Thursday, there will most definitely be volatility in the market. So we also have manufacturing, job openings, non-farm employment change, services, unemployment claims, average hourly earnings, non-farm employment change, unemployment rate as well. But this right here, the FOMC press conference, that's going to be big. Federal funds rate, FOMC statement. All right, so yes, we do have a continuation of stock market earnings. The U.S. Federal Reserve meeting is this Wednesday. Now, in terms of the First Republic Bank bids, the FDIC here in the U.S. set a deadline for Sunday, tomorrow noon. And possible buyouts by JP Morgan and Bank of America, we'll see. This is interesting data that I saw in the news. The new home listings dropped. So this negative 22.4% in April. It's the biggest decline since the pandemic of 2020. That's from redfin.com data. That's interesting. So meaning the sales are down. Some of the new home listings and then the sales are down. Another interesting information I found, a survey from FINRA Investor Education Foundation, is that 33% of new crypto investors in 2020, just last year, used a friend's suggestion as their primary reason for buying. You know what that sounds like? That sounds a little bit like FOMO. So you just want to watch out for that. 1/3, 33%, it's of new crypto investors. So that's people just coming into the crypto industry, the crypto game. All right. Next, USA Bank deposits and loans rose last week, suggesting credit conditions stabilizing. I interpret this more as the consumer sentiment is stabilizing. That was news from Bloomberg. So quite a big week we have coming up here and how that relates to the market. Let's go straight into Dow Jones. Stocks. Dow Jones. We're still right at the resistance level. I'm going to just redraw this. There's a lot on the map of the chart. We'll see here. What am I talking about? I'm talking about this resistance right at 344 to 341.63. You can see the yellow bar, and there's also a support trend line on the bottom. This does kind of look like a very long-term ascending triangle pattern. Definitely possible here. Definitely possible. Somebody might say, oh, isn't this some kind of upside down here and shoulders? Yes and no. Yes, that it looks like it, but it should have been at that bottom of a downtrend. This should have occurred down here. So it just means that there's some kind of support, higher low, And with the declining of interest rates, there might be one more interest rate hike. That's word on the street, on the news. But after that, maybe it's going to hold at some time, and hopefully we'll see all the numbers, the CPI, PPI, and PCE data coming down over time, like we've seen in some other countries' data. But we need to have this breakout. This is not confirmed, this top resistance right here at 343, until we have the massive breakout. That's what that drawing earlier was. We need a higher high, higher low, retest this as support, and never come back down. Then we know we're still in this uptrend. If we have a little fake out, we've had these fake outs here in December 2022, the end there. So I'm just weary. If we have, it's really earnings dependent. So that's all I'm going to say. On the weekly, we do have a little bit of this. We had a doji, but a bullish piercing. Hopefully this doesn't turn into a hanging man candle pattern, but it is interesting to note that in my idea that I released on Twitter and TradingView is that just let's always remember that for the Dow Jones at least, this blue circle was the pandemic high before the pandemic circle, and then this U is the pandemic low. We are way above that, okay? We are way above those two levels. So just to keep the perspective, yes, we have inflation, it's bad. Recession risk is bad. But is it as bad as the pandemic crash for stocks? No, it was not. It just, we still had a comparable crash. Let's measure it. It was about, let's say almost negative 38%. So if the top of the market in 2021 or 22 down, we only retraced down negative 21%. So almost half of the pandemic crash. All right. So in terms of where we are from the pandemic high to date, we're still up 23%. I hope people understand that. Now, I don't want to get too bullish because we're in the middle of earnings, but at the same time, just, let's always remember that we're not downtrending, crashing anymore down to oblivion. Okay. It's not the world is ending kind of feeling anymore in the stock market. All right, let's go to SPY. SPY, okay, yes, the line drawings. On the daily, we still have this rising wedge type of pattern. Okay. And we still haven't reached my bullish target up here. My original target from last year was about 6 months ago, was about 430 to the 425 area, which is this red line. Okay, I'm going to change to yellow. This blue little line was the bullish target. So that is still actually the bullish target this month during earnings. So our low has held. We had a little intraday higher low here at above the 400 level. So that's another level of support. If we can maintain good earnings, that's the bullish target, the 430 range. We could easily see the reverse is true if we pull back down. The $400 is an important support area. So I'm going to put a little just color code there for next time. These are our two targets that we're looking at for next time. SPY on the weekly is still pull up some candles. We still have the higher high, higher low, stair step, upstairs pattern, which is good. We just need to not see a shooting star. Remember, if you've been watching my stream for a long time, we know weekly shooting stars and evening stars are bad, right? Shooting stars are bad. Do we have that now? No, there's no shooting star here yet. So we're still fine. No need to panic. All right, let's go to QQQ, NASDAQ. QQQ, NASDAQ. In the short term, for past about 6 months, we're still in the uptrend on the daily chart. This is a medium term, short term, depending on, I'll say medium term time frame. The 333 is still our bullish target up here, and the support levels, we can see 310 and 288. So this bottom side, like 307 area. On the weekly chart, no shooting star or bearish engulfing candles as such in the blue circle. It's not happening yet. So hopefully we survive another week of earnings, meaning that last week was kind of mixed, right? Like Amazon earnings, they had good EPS and revenue, but then the cloud growth on that investor call was slowing or declining. So a little bit of mix. Most companies, I'm expecting some kind of mixed earnings, Like some good, some bad. It makes sense, right? In this inflationary world that we live in right now. All right. Just check the comments here. All right, let's just move on really fast. Let me speed up. I'm really trying to do 1 hour only live streams for sake of time for the viewers. All right, U.S. oil. We were in this descending wedge pattern, very long term. We broke out, gap up, and now we back tested the support. So we still have quite a bit of leeway here to go. Now I'm going to lower my target a little bit just because we have a 50% retrace right here. It's $75. If we can hold this, it's right at the Fibonacci. So the medium midterm target is 70. We're stuck between 65 and $70. We do have that secret hidden gap support, but as long as we pierce through that, there is on the daily chart right now a Morningstar bullish pattern. See if that candlestick holds to eventually, maybe in a couple months, get up to the $80 range target up here on the bullish side. I would caution if we lose the support and the price starts crashing below $65 to exercise caution, because it could crash all the way down to $55 on the downside target. Daily natural gas. Now, natural gas has been actually holding. I'm using a reverse Fibonacci extension to get this target. It's actually holding down here at above the $6 to the $7 range. Now, if this finally some kind of semblance of a bullish pattern here, if we do open some of the indicators, there is quite a bit of bullish momentum on the divergence on the indicators. On the weekly side, it is low with potential double bottom with a little bit of this MACD histogram. So it's not quite exploding yet to the upside, but as long as we hold above the 625 to 650 range, and hopefully it doesn't crash over the next couple of weeks or days, that there's that potential for that upside retrace to bounce at least 15, maybe perhaps 30%. We've seen that happen before. It's taken about 2 weeks. So this is a swing trade. I'm still very closely watching this, but remember, UNG does not always respond to technical charts only. All right. Let's take a quick look at just some of the big movers this week. So let's look at AMD. AMD, we have this golden cross. AMD on the charts at least is primed for a bounce, but it's going to be a little tempered by the earnings. We have to watch out for the earnings. Okay, because why am I saying this? It's right at the support low. So if you have good earnings, definitely could bounce that 10%, just like we saw with Facebook, maybe 10, 12, 15%. If they have blowout good earnings. It's right at that support level. They have earnings on May 2nd on Tuesday. So the bullish target is $100 even. It would be great if long-term AMD survives this, all tech stocks survive, and then we retrace back up to like a 128 or something like that. But you can see here on all these lows, these are dip buying opportunities on the chart that we've seen since October 2022 lows. So as long as we never go back down, which is a fantastic price, AMD was $55, now it's $89. But as long as you could clearly see 81 support, let me see here, 84 support, 76 support, 62 support, 55 supports. We could see that area, right? And the 127 resistance. So we'll just keep an eye on that and watch for it. Because this is yet to report earnings, yes, the bullish target is about 100 to 110, but if it crashes to the downside, you can hear 72 is the downside target, 72 to 78. Let's go to Apple. Apple had a fantastic breakout for 4 months straight, up 30%, 38%. Over a 126-day period. Let's remember, Apple is nowhere near its pandemic lows or even its pandemic highs. Okay, so Apple, obviously a heavyweight titan in the tech industry in the world. Now, if we Fibonacci that low to high, we can see that we're approaching the resistance level here on Apple. Just a little bit. There's resistance 177, 178, 180 resistance. It is quite in a uptrend, almost looking like gold. a little bit, very tight here. So the way to play this and to watch out for this is that let's start the bearish case first. If we have a bearish pullback, you can see it pulling down to 152 area, 152 area. Want to watch out for that 152. At a worst case, 133 if it comes really bad, or 143. Okay, meaning that the price has to pull down and fall down out of there. But if we have a breakout, you can clearly see news is probably going to get really excited once Apple breaks above 175, 178. Just exercise a little bit of caution in the short term. If somebody's a trader, investing's different, but if somebody's a trader, right before earnings is I'm looking for shooting stars for bearish reversal signal or bearish engulfing candles. Am I seeing that? No, we kind of had that a little bit in February and March, but the interest rate kind of passed and then we went bullish. And in terms of the EMA, right, it's up crossed. We did have a fake out one time. So let's just measure that move. It was about 15, 16%. This time, 16, 17%. So if it's going to fake out, it's going to fake out somewhere maybe now, right? Because of that 17, maybe 20% range. But if this is the real, if October 2022 was the real bottom down here, January was the real bottom for majority of stocks, hopefully we can survive this earnings. And next, I don't like to push too much on hope, but I'm just saying, trying to have a positive outlook, is that if we survive this earnings and the interest rate is increased one more time and the Federal Reserve says we're not going to really raise the interest rate anymore for 6 months or 3 months, and they're just going to observe, then the stock market has less barriers to go on a nice bullish run for recovery. All right. That's about 17 minutes. 1 second. Let me just pull up the list again. It's going to get bright. Let's see here. We'll do some energy and real estate. Let's do a little bit of real estate here. So let's do like ConocoPhillips. So COP and O, Income Realty. Just to get a little bit more broad view. So we're on COP, ConocoPhillips. Because of what's happening with U.S. oil still in the downtrend, but what I'm seeing that there's still death cross below the EMAs, but this looks like maybe a potential upside down head and shoulders. It's definitely happening. There's a clear, you can see here, clear trend line. Let me just pull up the chart. USO, right? You just had this pullback back down to the trend line. You go to COP. I mean, that's correlation right there. If we have this upside down head and shoulders, potentially bullish, very long-term target of 20%, that'll take us to all-time highs almost. 130 is the long-term bullish target. Fibonacci this low to high. We can see, actually, I want to Fibonacci all the way back to pandemic lows. Very, very long run. I mean, this is extremely correlated. It looks almost exactly the same as the US oil chart. And we could see that the lower, this trend line is being held right now in terms of the 2-year, 3-year trend line. We need to hold that support. So we basically need to never go below 97 or $90 on this particular stock. Upside target, resistance like a 110 and like a 117 area there. Okay, let's go next. O, Income Realty. Remember, just a quick note, long time ago, back in August 2022, on my idea, I published this idea that this is going to be a short opportunity potential on O, Income Realty, and look how far it crashed, right? So, sometimes the charts gives us the hint that there's going to be reversal down, and then we had a mega crash. Negative 32% on that downside, and we recovered very nicely. So I'm just going to erase that as an example. So if we take the low to high Fibonacci, we're holding above this 618. Now, the market right now, even though we have that data of new home listings down negative 22-ish%, is this particular company is trying to maintain this higher low right before earnings. Now, the breakout alert will be above $63. So you can clearly see the 65 and the 68 in terms of that bullish target to the upside. Support immediate $60 and $58. So right at this, where this, let me put a yellow bar. That's where the resistance is, right here at 63.38. If it's going to break up to that upside, if it's going to break up to the upside, right, you want to see the ascending triangle. It's happening. Definitely possible. EMAs still in the down cross. So right at the resistance, well, I'm going to watch for a breakout on that also. Okay, let's switch over to crypto. I don't see anybody in the chats or anything like that. So if you want to just say hi, you can just say hi, hello. You don't have to request. So welcome, everybody. All right, let's move over to cryptocurrency analysis. So thanks for watching. I am streaming live on TradingView, YouTube, and Twitch. We also have a Twitter if you want to follow on Twitter as well. Moving forward, let's go to TOTAL, crypto market cap on the daily chart. So this is the cryptocurrency market. We can see we hit that resistance at 1.26 trillion, pull back to that 1.11 trillion, and Bitcoin survived. We had that little bit of flash crash. Yes, that's because the indicators were flashing a warning signal that it's going to be a short. I do want to clarify some of my charts that I show, especially last week, like the monthly or the weekly charts. That's going to take like 1 or 2 years to play out, right? So if we're talking about if you're trying to figure out like what's going to happen in the next 5 days or 2 days, that's a much shorter time frame than sometimes what I'm talking about. So if you ever have a question about that, just ask me on the live chat to clarify. Just want to put that out there. So on the daily, we're still in this uptrend wedge. It's almost looking like the NASDAQ charts, QQQ. We are still in this golden up cross, which occurred on February to March 2023, and it was back tested that support. So there's still 2 levels that remain to be seen, and the investors are probably watching stock earnings. I would say maybe at least a third of people, investors. So the resistance 1.3 trillion and our 1.1 trillion is our support. Like I said, our final line in the sand before there's a big problem in crypto is 1.0 trillion itself, which is basically this X. Okay. So as long as it's gonna hesitate here, because if you zoom out on this daily, when's the last time we had a up cross, golden up cross? July 2021, we had one more finish rally to the highs, right? Still, that was 147% on this index, basically. Now, remember, pandemic lows to highs, we didn't retrace all the way back to pandemic lows down here, stocks and crypto as well. So remember, it's still kind of relatively high price right now. We're just trying to get this long-term, weekly, yearly bounce going on, and we have to survive the earnings, right? So hodlers, the investors, they're hodling. Crypto miners, I mean, they're mining, right? So the ebb and flow, things would start panicking if we have a crash, a flash crash, or a serious market crash like that. Now, what's coming up in the next couple of months is we had the Litecoin happening in August, I believe, and the IMF Global Crypto Rules and Regulations white paper that's coming out in September of this year, supposed to come out. So that's only 4 months, 5 months away. So we just look forward to that. All right. Just keep that in mind, I'm saying. Okay, so weekly, we're above our 200 EMA, our 50 EMA. We're stuck between the 50 and the 100 EMA and the 618 retrace. Now, what I want to caution people long term is if we start losing price of crypto and Bitcoin and we start downtrending ever so slowly, I mean, if like the next 6 months is not really bullish and good, I would actually say to exercise some caution in the market, okay, as a bear scenario, if it starts downtrending again, because this could be a fake dead cat bounce. We don't want that. We don't want a fake bounce and then a crash. We don't want that. We want the stocks has to keep going up, crypto has to keep going up. We need to hold above those levels. Let's go to Bitcoin futures. I don't look at this on stream too much, but we might see some additional clues since we're in earnings season right now. Let's Fibonacci the 2020 pandemic low to high here on Bitcoin. See, we hit the 786 level and we just retraced to 618. So if people on a weekly chart, Now, if we're gonna keep going up, we need to maintain it high and keep those higher highs and the higher lows. Because you can see on the weekly chart, there's a gap here down here at Bitcoin about 24,000. 20,000, I would say, is our final line in the sand before people start panicking to 15,000. So the intermediate support is about $25,000 of Bitcoin. So high, low, high. If we don't break out to higher highs in the next couple of months to 30, we need to really break above 30K to get people hyped up. People talk about their friends, tell their friends, and tell people to buy, right? We're in a more, I would say in terms of the weather, just how people feel, a little bit more happier, a little bit, right? We're not in the crypto, cold of the winter, the worst feeling ever. It's kind of flipped around, right? So just even that, business opening up, travel, tourism, people a little bit happier. That's what I'm noticing when I go outside, right? Or online. So in terms of our side, are we super overbought in this range up here at 80, 85? No, we're not. Is there a strong reversal signal? No, there's not, right? So it kind of looks like this area, like I said, after the 2020 crash, as long as we maintain that high in terms of going higher high, not an emotional high, but a price higher high, physical higher high. And then we have to have the ultimate breakout. So we're still stuck below this resistance. That's what I'm saying. We need to break out above 30K and then moon time, if you know what that means, meaning rally up, continue. We're still up 100% on Bitcoin, almost, from the lowest low. So just remember that. All right, let's go to Ethereum. Ethereum. Interesting. Let's not use this particular chart. This is an educational example. Go to Bitfinex. I would go to Bitfinex on Ethereum USD. Now on this weekly chart, I do want to point out these long-term targets. You can see we are literally riding the weekly support trend line. Literally riding that. So, there are basically three directions that crypto can go: down, sideways, or up, basically, right? There's only really three directions. Mainly, if you want to simplify, it's only two directions. We're only going up or we're going down long term. So we did have this symmetrical triangle that we did break out above and go sideways. Okay, that's fine. Now the measured move was supposed to be about 40 to 70%. So, let's just say like a 50% average of that, right? From the breakout spot, 50% average. We actually almost hit that at 2257 bullish target here. So how would I know we're in danger on Ethereum? As soon as we start downtrending on this in the next couple months. Obviously the price would go down a lot, but we're not seeing it break down yet. So if we could just we're trying to crawl up and hold this and try to uptrend here. So again, on the daily chart, if I kind of turn things off, we're still golden up crossed. Great. So our support level is 1667, 6067 at this horizontal blue line, and 1837. So for me, I am not panicking right now. No need to panic. The fear, uncertainty, doubt, I would say half of it is behind us. Inflation, bank crash. I mean, it's kind of stabilized a little bit. We're not having a crazy stock market crash right now. Earnings is mixed. It's really about the crypto regulations. If you've been watching the news, Coinbase, SEC sent a Wells notice to Coinbase, and then Coinbase finally countersued just last week, I believe, or 1 or 2 weeks ago, asking for clarity, basically, about the regulatory problems. So that's always going to be a problem with crypto. There was less regulation 5 years ago because why we have this regulation problem? Because FTX, Luna, etc. And now with the actual, Signature and Silicon Valley Bank collapse. I mean, there's too many problems with cryptos and regional banks and even shadow banking, right? So Binance US, even they had problems finding their next banking partner. So there's still some back end problems, right? It's not a perfect solution right now. It's not a perfect solution. But does it mean so with all that information, I take that fundamentals, I take that, I look at the news, I understand what's happening this year. I look at this chart. Am I afraid of anything? No. No. As an investor, I'm not afraid of anything. We're starting to uptrend again. Great. It's a matter of time. Patience is the key. If you're an investor, a hodler, patience is the key. Now's the time to execute more patience. I mean, we went through some of that worst crash right here and we retraced through that. Now, can we pull back in the short term? If you're a day trader, you're 5 minute 15, you're saying I want to get a short setup or a little short scalp. We already had some of that, right? So we're looking for highs to lows. We're bouncing off this double bottom on the RSI, tightening up here on the 15 minute. So looking like some volatility. This thing is about to pop, maybe 3 to 6% to the upside or the downside. Is a symmetrical triangle setup. The hour, we're not quite oversold. 4 hour, not quite oversold either. So again, it's going to be patience. Dip buying might be a good idea, educational wise, moving forward. I do have an educational Ethereum short up here, just to prove that sometimes random strategy is not the best strategy. This is not my real account, by the way. And then this also Bitcoin long, where we average filled at 28, right? We're still up $1,000. Last week it was negative 400. So I held through that, right? That's the emotional practice I'm trying to show people. Yeah, it's down a little bit, but now it's up again because the price rallied back up. So as an investor, you got to have a strong, I'm going to say like emotional health for that. You have to understand, I committed to that. I'll get to it later, right? As you get more experience as a trader investor, you commit to it. Like, what's my maximum loss here? And then no fear. That's what I learned in the market. No fear or less fear, less emotions. Okay, let's go to Binance. BNB USDT. All right, what's Binance Coin doing here? So I always like to caution people about Binance because some people don't remember that Binance a long time ago was like $3 or $10. Okay, so the fact that it's $320, some people might say, wait, that's 32 or 47x. Yes. Can it go higher? Yes, it can. Because it's crypto and there's limited amount of coins. That's why. It's not unlimited amount of coins. There's a finite amount. You could check coinmarketcap.com for those numbers. The finite amount of coins, so limited supply. That's the original Bitcoin design. Why is Bitcoin, almost 30K right now? Because there's only less than 17 million coins, Bitcoins, that in existence. So there's going to be a markup price on that. Same thing with Binance Coin. They do have some token burns, but it's still holding the support. You can see it's like flagging to the side right now a little bit. Not quite a definite flag or pennant, but what I'm saying is it's just going sideways. All right, weekly. Bounce off that 786. Let's see if this candle almost hit that. Now it's retracing. Very correlated with Bitcoin as well. Ethereum as well. We're all tightening up here. If we measure this actual little rising wedge, 37%. So once we break out above, I would say $400, there might be that 25% increase potential with a stop loss of about like 25% for a long-term investor as such. So Binance, I'm a little bit cautious of because I know the big support weekly is way down here in the 250s or upper 190 range. So that's why right here, like 175, if ever Binance Coin ever crashes, I hope it doesn't. But if it does to 160 or 100, I might pick some more up in terms of buying some of that Binance Coin. Let's go to the next one. Solana, I'm going to speed up here unless somebody has a request. Oh, somebody asked me, what if it broke the resistance on TradingView? Okay. Sometimes the comments comes very late on the live stream replay chat. So which chart were you talking about? Bitcoin, Ethereum, Binance Coin, or total market cap? Just let me know that. I'll come back to your question. Okay, Solana here on daily. Resistance from last week is still standing here above 2850. I'll try to explain in this example as well that right? We're coming down right now. Resistance is the ceiling. So if sometimes when we break out above resistance, what that means is potential breakout or potential rally. Sometimes on crypto, what that means is you have moon rally, like you get a 500% or a 1000%. That's what I'm talking about. So in Solana, we have this basically weekly support level that we bounced off of. We could retrace all the way back down to about $14 or $15. But if it decides just establish this higher low and people are not afraid anymore and want to invest and have money, okay, we could definitely break out above this resistance at $28 and then try to hit the $55 or the $100 mark again. It's going to take some time, right? It looks like left to right is not a lot of time, but the crash retrace from top to bottom took 423 days. So that's, over a year. So in terms of retracing from where we are right now to that anywhere the 100% to 200% mark could literally take 6 months to 12 months. But I'm giving somebody the long-term view, and day traders can work within that. All right, let's go on to the next one. Cardano on the daily. So again, this is an example from 1 or 2 streams ago, but Cardano is holding the support level from 2020 and 2023 January. So again, as long as we don't start downtrending and crashing, we're okay. When I see a chart like this, two things can happen. Is there a mega support like we had in 2019, 2020? No, there's not. Right now, this looks almost like a 382 or 50% Fibonacci retrace. Excuse me. Depending on the level. All right. So I retract that. It appears down a lot. 0.88 retrace, and that's true because we should have crashed like 90%. So it looks like, I'm on a log scale as well. It looks like it's not really a small crash, but this is a huge price difference. 285 to the lowest 25 cents. Now, one other way to look at this is we have a trend line resistance and we have back tested that. So I have my idea in my trading view that the Bitcoin descending wedge and also for Cardano descending wedge has been broken out. Now we need to never go below 33 cents this year or never go below 25 cents. If that is the case, we can have a nice bull run. Try to get to 65 cents. Dollar would be great for the bulls. Finally, $1.13, maybe $1.55 if we get up there. Okay. Very nice. Very nice. So it doesn't, like I said, we don't want to get fooled by the visuals. If this looks like maybe it could be a huge drop, yes, but it was 90% off at one point. Cardano. It's a matter of long-term hold. Let me use this for an example for a swing trade for our swing traders. Now, swing trade, we just had this intermediate RSI low here on Friday. If somebody bought that low, they would be up like 1 or 2% right now. We need a significant crash pullback. We can see high, low, high. If this really is the higher low, we should hit the higher high up to like 50 cents or something like that. Target area. It's not happening quite yet. Not happening quite yet. Right? High, low, high, low, high. High, low, high, low, high. 50 cents, right? That's the target to the upside. Downside target would be about 40 cents. Okay? Patience is key. Patience is key. Because you have to remember that when I open this stream on public live stream, I usually do it on the weekends. I'm not doing this at peak crypto trading hours. It's a swing trading investing kind of longer term. Unless somebody has a day trading request, I could certainly do that. But market's basically quiet right now. In the middle of stock earnings, let's not get too tunnel visioned on one crypto. Let's look at many cryptos. XRP. XRP is still holding its sideways consolidation pattern. The 32 cents has never been tested again. Multiple times we hit 34, 36. So this blue is a very strong support level. It's starting to turn into not quite an ascending triangle, but a rising wedge. Very, very subtle. Because we're not crashing down like this anymore, right? Low, high, higher, low, higher, lower, high, and then crash. You know, high, higher, low, higher, high, higher, low, right? We need to hold above 40 now. If it's, we just had the golden cross and then pull back down to test that resistance at 42. So bulls need to defend right here, right at 40 cents. That's the defense bulls need to play. Make sure we don't crash. Okay, speed things up here. AVAX. I'm just going to call it potential upside down head and shoulders on AVAX with a slanted neckline, the long-term target of 80%. That's why I have this risk to reward on the side. The downside risk about 24%. And remember, educational for trading, we're never risking our full account on any trade. We're only risking about 1% per trade for, I would say, beginner to intermediate, right? Advanced professional, they probably have their own risk management. But a beginner to intermediate is only risking 1%. And I usually, if you want me to explain that, I can explain that at the end of the stream. But if you look at this, I have to make the call, right? Are we crashing more on AVAX? It's actually about 50-50 right now because we do have this resistance right at $22. And there is potential that it could turn into a double top bearish pattern and then crash back down to $10. That's why it's not 100% upside down head and shoulders. In the intermediate, we are starting to go consolidation symmetrical triangle sideways. And again, probably it's because the Coinbase lawsuit, earnings, inflation, recession risk. So always keep the super bearish pattern on the downside in the back of our minds. DOT didn't quite crash back down all the way back down to zero. There's negative 50% down to the ICO, not zero, but the ICO level of 276. The market is attempting, however, we're not in a downtrend proper anymore. It's higher high, higher low. We're trying to get out of this range. 537, higher high, higher low, and then we'll try to penetrate to the upside and break that resistance. That's what the market needs. But many bulls need to defend this lower support level. Doge. So Doge, didn't crash back down. Similar to Ethereum, didn't crash back down all the way. But we'll see here that this low to high area did hit that negative 88% off or negative 90% off from the top. Very similar to Cardano. Not much can be said here on the daily chart, except that we are holding that Fibonacci and it is starting to symmetrical triangle. I'll be a little bit cautious of this one because Elon Musk's tweet potentials. But if it starts to go bullish, there should be an 85% bullish target from the breakout up to about 17 cents. If we break bull, we break above 10 cents and we never go back down, that's the target. That's the target. But you can also see we have quite a huge, large space down here. It hasn't happened yet. It has not happened yet. On the day chart, the price is struggling, trying to just get above that, the golden up cross. We'll see if that happens. SHIB, very similar. You can see high, high, low, 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 tightening symmetrical triangle pattern. There's about 75% volatility here to be had. SHIB, the risk reward is wrong, but the risk reward should cut off about at the 600 level on that red square. But the support level here on 852, let's see, high, low, high, higher, low. We should be able to crash back down to 870 and then bounce back up to 1200. See if that just ping pongs in there. Matic is different. This is what I'm saying. Be careful on Matic and cryptos that look like this, who have already had their significant bounce. Matic's already had a 300% rally, so it makes sense. It fizzled out. There was almost a double top, and then it started to downtrend. So be careful of caution on Matic. Caution on Matic because Matic network, because we don't want to see this happening. This is like Netflix. I was thinking about Netflix in my mind. Netflix, you're kind of seeing that. Let's flip to it. right? You're having this uptrend for a long time, and then if it doesn't, it's Netflix is trying to survive. Same thing with Matic, trying to survive. You have the uptrend, trying to survive the support. We need to never go below that on the crypto cap, the support level this year. It needs to sustain and hold for like 6 months, and then people get really, really excited and confident. You have to realize the price is not going to go up for any of these cryptos and altcoins by themselves. People have to buy, then it will trigger the algorithms and the bots to buy. Like any shorting algorithms or any big firms that are shorting, right? Short squeeze. It's already happened way back here, but you get what I'm saying is we need people to actually buy and prop the market up, so to speak. Big market makers need to buy, large hedge funds right now. But right now, the conditions is aggressive traders were already in this. Like I already have my little crypto portfolio, right, of stuff that I'm holding for a long term. But traders are always looking for a dip. Okay, they're always looking for a dip, and we're starting to see that like right now in terms of the swing trading. Okay, so I'm not really seeing any more questions or requests. Could be the time, but also like I'm saying, when I go outside and I observe people, just society, or I look online, social media, is people are out having fun right now. I think there's some kind of spring break for students, vacation, weather's getting warmer in parts of the world, people going out. There's a lot of events suddenly happening in April and May, so it makes sense to me. All right, let's just finish off here on just a little bit of Forex. I'm not seeing any requests or any requests for risk reward, so I'm not going to do that on this stream. You could refer back to older streams for that. Let's go to Forex. I haven't talked about Forex for a while. On the daily, let's look at Euro USD. We're going to end soon. Euro USD had quite the rally. Actually, we should start out with DXY just as a reference. So different order now. We're on the US dollar index, DXY. Now, the 2021 low to the pandemic high here, 2022 September, we were on a massive bull run. This is parabolic. I want to memorize this on the chart. Double bottom. Somebody asked me what happens if it breaks the resistance. Sometimes you get a mega rally like this. Mega rally like this. You have a breakout above the resistance and the trendline resistance, and then you keep going up to the upside. Right? Keep going up to the upside. Sometimes this is hard to draw, but calling the top is not impossible. We have trend line here, and then we have a large pullback. What I am noticing right now on the chart is we have a double bottom potentially, which it's not always correlated, but when we have a double bottom, so when dollar goes up, sometimes the stock market goes down. Sometimes, right? So just want to watch out for that. There is a definite inverse correlation between US dollar and the euro, which is why I'm doing these back to back. So we have a double bottom support right above $100. If it rallies 105 and then double that target, the measure move of 3% to the upside is 108. So volatility is the name of the game right now. I'm looking at this right now and saying, this might be a long opportunity. Very interesting, and be careful of that. Now let's go to Euro USD. Euro USD, we can see right now, not quite a perfect double top, but you can kind of see it in the resistance zone from left to right, like here, left to right, like this, right? It's not downtrending anymore. We had the higher high, higher low, that's holding above 104.8, and another bullish pattern. Now we need to go dig deep in this. Is it overbought? No, not quite overbought. The hourly is still in the uptrend, the 4-hour as well. So we're probably going to see maybe one more rally attempt, and then you get some bearish divergence kicking in, bearish momentum. You're starting to see it build where this is starting to go up, the price and the MACD and the RSI is pointing down, losing momentum there. We do have the golden cross, however, so it's not a perfect correlation. It's just that was the correlation in the past. USD JPY. USD JPY tracking very similar to the DXY, the dollar currency index. So we could see we had the crash, just like DXY did, hit the higher low and trying to hold the support. Very strong rally. Now this, we were supposed to have a head and shoulders. It didn't quite happen. I was talking about this. Didn't happen. We tested it, neckline, and we actually bounced up above it. So if DXY dollar is going to increase, the yen, Japanese yen, might increase as well. We can see here that we have a symmetrical triangle building right at that breakout spot. 3% is the bullish target to the upside, the 141 target on the upside. Now, the inverse is true. If it does not break to the upside, you can see the support level in the yellow circle. Somewhere in this area, lower 130s, upper 120s can be that support area. Just something to watch out for. All right. One thing we did not look at in terms of stocks is VIX. All right. So VIX is the volatility S&P 500 index based on the options of S&P 500. It's basically a volatility fear index that is widely used. I just want to point out that before we sign off is we're nearing the support level. Okay, we're nearing the support level on this volatility index. So I just want to kind of watch out for that. Parallel channel. All right. Now, there's going to be 2 or 3 scenarios. Scenario 1, if VIX crashes, keeps crashing down, we have lower volatility, S&P 500 should go up. Inverse is also true. If we have a reversal right here, we might see a little bit of pullback in the market. And if earnings is bad as well, we might see volatility spike up, which means the S&P 500 should come down at least a little bit. So I just want to point that out to people. It is nearing a potential kind of danger zone, and we have seen it kind of bounce around here before we had a large market crash, increase in volatility. So I just want to put that out there. All right. If anybody has any last requests, just let me know. I'm going to end the stream in a few minutes here. It is a Saturday, beautiful Saturday. Try to stay positive on the weekends. All right, I'm not seeing anything. So I just want to say thank you so much, everybody, for watching and following the No FOMO Charts, Stocks, and Crypto TA Charts live stream. Again, I'm streaming live on TradingView, YouTube, and Twitch. We also have a Twitter group that if you want to follow. Sometimes I release some weekly charts or news or data that's very relevant to the market. But we're in earnings right now, so it's just, you know, if you just check the news every day, you'll probably find that information for yourself as well, just every day this week. All right, everybody, hope you have a good one. I will see you. Let's see when I'm going to see you next. The stream lasts for probably until May 6 or 7. I'll probably come back on May 6 or 7. All right. Thank you so much, and I hope you have a good one. See you next time. Bye-bye.